Hello, and welcome back to the channel. I'm Algabot, and today we're taking a close, educational look at an expert advisor for MetaTrader 5 called Star Pattern Reversal. This strategy blends two classic ideas from price action trading, the three-candle morning star and evening star reversal formations, combined with support and resistance. It's a mean reversion approach that aims to fade exhaustion at meaningful levels on the chart. Over the next few minutes, I'll walk you through how it reads the candles, how it manages risk with the average true range, and exactly how its entries and exits are constructed. Remember, this is for educational purposes only. Let's get started. Let's start with the big picture. Star pattern reversal is a reversal strategy, which means instead of chasing a trend, it looks for moments where a move appears to run out of steam and turn the other way. It builds that idea on two well-known foundations. The first is candlestick patterns, specifically the morning star, a three-candle bullish reversal, and the evening star, its bearish mirror image. The second is support and resistance, the idea that price tends to react at levels it has tested before. What makes this approach selective is that it doesn't act on every star-shaped pattern it sees. Star formations appear all over the chart, and most of them, sitting in the middle of a range, lead nowhere. This strategy only honors the pattern when the middle star candle prints at a fresh swing extreme. In other words, at a tested support level for a long or a tested resistance level for a short. That requirement for confluence, pattern plus location, is designed to filter out a lot of the noise where false reversals tend to cluster. The average true range, or ATR, plays a supporting role here. It is never used as a signal to enter. It is used purely for risk management, to add a sensible buffer beyond the pattern when placing the protective stop, so that normal market wiggle doesn't close the trade prematurely. This strategy works on any symbol and any time frame you attach it to in MetaTrader 5, since it reads raw candles rather than anything market-specific. From an educational standpoint, it tends to suit traders who are interested in price action and candlestick reading, and who prefer a structured, rules-based way of defining a reversal rather than acting on discretion alone. As always, trading carries risk. Losses are a normal part of any strategy, and nothing here is a recommendation or financial advice. It is simply a breakdown of how this particular expert advisor is built. Let's walk through the exact logic, step by step. The expert advisor acts only when a new bar has closed, so it's always working with finished candles, never a half-formed one. On each new bar, it first measures two things over a look-back window, 20 bars by default. It calculates the average candle body in that window, which gives it a sense of what a normal-sized move looks like, and it records the lowest low and the highest high, which mark the recent support and resistance. Now to the long setup, the morning star. The strategy looks for three candles in sequence. The first is a strong bearish impulse candle, meaning its body is at least as large as the average body multiplied by the impulse factor. The second is a small star candle, whose body is no larger than the first candle's body times the star factor, half by default. That small body represents indecision after the drop. Crucially, this star must reach a fresh low, dipping to or below the prior support extreme. The third candle is a strong bullish impulse that closes back above the midpoint of the first candle's body. That close is the confirmation that buyers have stepped in and reclaimed control. When all of those conditions are met together, the EA opens a long position. The short setup, the evening star, is the exact mirror. A strong bullish impulse, then a small indecision star that pokes to a fresh high at the prior resistance, then a strong bearish candle that closes back below the midpoint of the first candle, confirming sellers have taken over. Risk management is rule-based. For a long, the stop loss is placed below the lowest low of the three pattern candles, with an extra buffer set as a multiple of the ATR, giving the trade a little breathing room. The distance from entry to that stop becomes the measured risk. The take profit is then placed at a fixed multiple of that risk, the reward to risk setting, which defaults to 2, so the target sits twice as far from entry as the stop. For a short, everything flips. The stop goes above the highest high of the pattern, again with the ATR buffer, and the target is projected the same multiple below entry. The EA also holds only one position per symbol at a time, so it won't stack overlapping reversals. Let's read through the MQL5 code as it appears in MetaEditor. At the top are the inputs you can adjust. StarBodyFactor keeps the middle candle small relative to the leading one. ImpulseBodyFactor sets how large the first and third candles must be versus the average body. Extreme loopback, 20 by default, defines the window for the swing high and low. ATR period and SLATR buffer control the protective stop padding, and RewardRisk, set to 2, defines the take-profit distance as a multiple of risk. Now look at the morning Boolean, the long condition. Reading it line by line. The first candle closes below its open and is a strong impulse. The second candle's body is small. The third candle closes above its open and is also strong. That third close sits back above the midpoint of the first candle, and the star's low has reached the prior support. When all of that is true, the buy block runs. It takes the ask price as entry, sets the stop just below the lowest low of the 3 candles minus an ATR buffer, projects the take profit 2 times the risk above entry, and calls trade.buy. The evening Boolean is the exact mirror for the short side. A strong bullish first candle, a small star, a strong bearish third candle closing below the first candle's midpoint, and the star's high reaching the prior resistance. The sell block then takes the bid as entry, places the stop just above the highest high plus the ATR buffer, projects the take profit the same multiple below entry, and calls trade.sell. Both sides are true mirror images of each other. Let's bring this to life on the chart, walking through a long and then a short, candle by candle. On the far left, price is drifting lower. The second candle pushes down and prints a low right at the green dashed line, the prior swing low at 1.0822. The next candle bounces gently off that area, which confirms it as support, the level the strategy will care about. Now watch the morning star form. The candle that follows is a strong bearish impulse, pressing straight back down into that support line. Right after it comes a small candle, the star, whose body is tiny compared to the one before it. Notice that the star dips to a fresh low, poking just below the support line. That is the exhaustion footprint the strategy is searching for, a hard push down that immediately stalls into indecision, right at a level price has already tested. Then comes the confirmation. The next candle is a strong bullish impulse that closes back above the midpoint of that first bearish candle. With the pattern complete at support, the buy entry marker appears, and the position opens. Look where the stop sits, just below the pattern's fresh low, with a small ATR buffer beneath it. The distance from the entry down to that stop is the measured risk. The take profit is projected at twice that distance above entry, our reward to risk of 2. From here, price does the work. The following candles climb steadily, one green body after another, until price reaches the take profit target and the first trade is complete. That is the long side of this strategy in action. Fade a fresh low, confirm with a reversal candle, and aim for a multiple of the risk taken. Now the chart shifts character. As price pushes up, it stretches to the red dashed line, the prior swing high at 1.0922, then pulls back, confirming that area as resistance. Watch for the evening star, the mirror image of what we just saw. A strong bullish impulse drives back up toward resistance. Then a small star candle appears, and this time it pokes to a fresh high, just above the resistance line, indecision right where buyers ran out of room. The next candle is a strong bearish impulse that closes back below the midpoint of that bullish candle, the rejection the strategy waits for. With the pattern complete at resistance, the sell entry marker appears and a short opens. The stop is placed just above the pattern's fresh high, again with an ATR buffer, and the take profit is projected the same multiple of risk below the entry. From there, price rolls over, candle after candle pressing lower, until it reaches the take profit target and the short is complete. So in both directions the logic is identical in spirit. Wait for a 3-candle reversal, demand that it happen at a tested level, and define the stop and target by structure rather than guesswork. This is an illustration of the mechanics only, not a prediction of how any real market will move. That brings us to the end of our look at star pattern reversal. We covered how it combines the morning star and evening star candlestick patterns with support and resistance, how it demands that the star form at a fresh swing extreme to filter out noise, and how it uses the average true range purely to size a sensible protective stop. We also read through the MQL5 code and walked a long and a short trade across the chart, step by step. Remember, Everything here is educational content only, a breakdown of how this expert advisor is built. It is not financial advice, not a recommendation, and not a solicitation to trade. Trading carries real risk, and losses are a normal part of it. If you found this helpful, please like the video, subscribe for more MetaTrader 5 strategy analyses, and leave a comment with what you'd like to see next. You can learn more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.